My bank made $847 off my money last year and never told me once. Not in an email, not in a statement, not a single word. I had $10,000 sitting in a standard savings account, the kind most people have, the kind your bank opens for you automatically when you get a checking account. And I was earning $12 a year. I thought that was normal. I thought that was just how savings accounts worked. Then I started doing the math on where that other money was actually going. What I found made me move my money the same week. And I want to show you exactly what I found, because nobody at my bank was going to explain it to me. Here's the thing most people don't understand about how banks actually work. When you deposit money into a savings account, any savings account, the bank doesn't just hold it, they lend it out immediately. Your $10,000 goes to someone taking out a car loan or a small business line of credit or a mortgage. The bank charges that borrower between 6 and 9% interest depending on the loan type. On $10,000 lent at 7%, the bank earns $700 a year. Minimum. What do they pay you for the privilege of using your money? In 2026, the national average savings account APY is 0.46%. On $10,000, that's $46. The gap between what the bank earns and what they pay you is called the net interest margin. It's how banks have been profitable for 200 years. And here's the part that took me a while to fully absorb. This is not a fee. They're not charging you anything. They're simply keeping the difference. And they're completely transparent about it if you read the fine print. Nobody hides this. It's just that nobody explains it either. I wanted to know my specific number, not the national average, my actual bank's math. So I pulled up my statements for the last 12 months. I had an average balance of around $10,000. My bank's savings APY, 0.12%, not 0.46. The national average already looks bad. My bank was paying me 0.12. That's $12 a year on $10,000 for 12 months. Meanwhile, I estimated what my bank was earning off that $10,000 based on their publicly reported loan rates. Conservative estimate, 6.5%. That's $847 they earned. They paid me $12. I'm not saying this to make you angry at your bank. Banks are businesses. This is how the model works, and it always has been. I'm saying it because I genuinely did not know this was happening to me personally. And once I ran the math, the next question was obvious. The obvious answer is a high-yield savings account. I'd heard of them. I figured it would take 20 minutes to move my money. So I went to the first one that came up in a search. The rate was advertised at 4.8%. That sounded great. I started filling out the application. Then I hit the fine print. Minimum balance, $25,000. Monthly maintenance fee, $15 if you fall below that. I had $10,000, which means in a good month, I'd earn about $40 in interest. But if my balance dipped even slightly, and it did, life happens, I'd pay $15. $40 in, $15's out. Net, $25 a month, less than $300 a year. Better than $12, but not by the margin I was expecting. I closed that tab and started over. The problem wasn't that high-yield savings accounts don't work. The problem is that not all of them work the same way, and the ones with the biggest advertised numbers tend to have the biggest hidden conditions. After that, I stopped searching for the highest rate and started filtering by 3 things. First, FDIC insured, non-negotiable. The FDIC covers you up to $250,000. Any account you move money into needs this. Second, APY at least 10 times the national average. Right now, that means at least 4%. Third, 0 minimum balance requirement, 0 monthly fee. Any account that didn't pass all 3 didn't make my list regardless of the rate. I found several that qualified. I'm not recommending any specific one here. Rates change, and what's best today might not be best in 6 months. The framework matters more than the name. I moved my $10,000. First full month, I earned $37.42. That's not the $847 my bank was making. But it's $37 coming to me instead of $3 going to me. Annualized, $440 a year compared to $12. The math took me about 45 minutes. The transfer took 3 business days. The difference over 5 years at 4.5% versus 0.12% on the same $10,000 is over $2,100. That's money that existed either way. The only question was which direction it was flowing. Here's the part I want to be honest about. I waited almost 8 months after I first learned about HYSAs before I actually moved my money. Not because I didn't understand it. I understood it, I just kept putting it off. That delay cost me about $200 in interest I could have earned. The information is easy. The action is the part that takes something. The math on your account exists whether you look at it or not. The question is whether you decide to look, and then what you do with it. Next week, I want to show you what happens to that same money over 30 years when you start compounding. The numbers get genuinely uncomfortable.